Hello and welcome to the look ahead for Wednesday, the 29th of October with me, Fiona Cincotta, Senior Market Analyst at City Index. So a big day tomorrow, lots to be looking forward to. We've obviously got the Federal Reserve interest rate decision. There is also the Bank of Canada rate decision, and we also have Mag7 earnings as well. Now, as we have these events kicking off, it's at a time where we've seen a little bit of a weakening in the US dollar, and at the same time we've seen US stocks trade at record highs. This is basically on the back of optimism that the Federal Reserve will be cutting interest rates by 25 basis points, and that earnings from the likes of Meta, Microsoft and Alphabet tomorrow, followed by Amazon and Apple on Thursday after the close, will actually potentially support the recent rally that we've had. So just having a look, this is the chart for the US dollar, Japanese yen. Now, just as far as expectations, as far as the Federal Reserve is concerned, tomorrow, the Fed's expected to cut interest rates by 25 basis points. This is around 98% priced in, so pretty much a dead cert. So actually what's going to be moving the markets is much more the press conference by Federal Reserve Chair Jerome Powell. Now, the other thing to point out here is there are also sort of growing expectations, as we heard from Powell earlier in the month, that the Fed could be potentially nearing a point where it may be close to ending its QT program. Now, if it did do that, then that would be considered a additional loosening move. So if we see the ending of that QT program plus rate cuts, then that potentially, if we combine in up the earnings from the Mag7 as well, could really set stocks up for further gains and further weakness in the US dollar. So just having a look here, as I said, US dollar, Japanese yen. As we can see, we've fallen away from this level here. This is the 153. We got to 153.25 today, pretty much identical to where we got to at the beginning of October. Now, is this a double top reversal pattern that we're seeing? Remains to be seen, but we have seen this strengthening in the yen at the same time that we've seen that sell-off in the US dollar. And that's basically at a time when Trump is also in Japan meeting with Prime Minister Sanae Takaichi, and there's been sort of, moves towards a deal regarding rare earths as well as other deals, but and there's been a lot of talk about the special relationship there. But I think what actually moved that Japanese yen to strengthen was actually comments by the Japanese economic minister, who said about sort of who emphasized the importance of the FX reflecting economic fundamentals. Now, that's been taken as a sort of very softly, not an intervention because we're a good way away from that, but it's just a first step, if you would like, and that's helped to strengthen the yen. If we do see the Federal Reserve cut and the QT program, as well as cut rates in line with expectations, we could see further weakening of the USD Japanese yen. As far as December is concerned, I don't think we're going to get much in the way of forward guidance from the Federal Reserve, especially given that we've got this ongoing US government shutdown, and does mean the data is in short supply. Obviously, we had that inflation data last Friday that was weaker than expected. As far as jobs are concerned, there isn't any jobs data. We know there's been concerns about the health of the labor market. And then today, Amazon have announced 14,000 job cuts as well, although they haven't announced the geographical locations of those cuts. But we're relying on anecdotal evidence as far as jobs are concerned in the US. So, but as we do get sort of that, and the Fed doesn't push back much against expectations, which the market is expecting another 25 basis point rate cut in December, if the Fed doesn't push back much against those expectations, then this is the level I'll be looking for next. 151, that's the high that we saw back in August, also the level that we saw at the end of March. So that would be the next level to watch. And if we get a break below there, then we're looking back at the 150 level. On the upside, if we do get a real pushback from the Fed against a potential December rate cut, then the upside would be looking for there is a move above the 153.25 or 27. That's going to create a higher high. You do have that rising upper band of the rising channel as well, as be considering it 154. Also, just having a quick look at what's going on in the NASDAQ, obviously with all these tech earnings coming in. Tesla reported last week, as I mentioned, and then we've got 5 of the Mag7 this week. Now, these stocks I've highlighted before are important, given the how much they contribute to the S&P 500's market capitalization, that they are responsible for the majority, the lion's share of earnings growth. So, but expectations are high, but interestingly, they're coming as we're seeing the NASDAQ break out or attempting to break out of this upper band of this rising channel. RSI, it's actually in divergence, which is worth pointing out, but if we get a break above there, then potentially then it won't be. Levels to be watching out for, we're just testing at the moment that one almost 126, 125.84, sorry, 125, what was the high today? 125, 856 record high today. Looking then towards naturally 26,000 will be the next level on the upside if all those expectations fall into place, such as the Fed rate cut, the end of QT, and also upbeat earnings, then that's the level that we could be comfortably looking for in the upside going forwards towards the end of the year. As far as support is concerned, this level here, 25 to 30 or 200, that was the level that we saw back on the high on the end mid October, 10th of October. Break below there, then that sort of brings this level here, the 50 SMA at 24,380. That's also the lower band of the rising channel, but it would take actually a move below the 23,970 to create a real lower low from that low that we saw in October. Just finally, going to take a quick look at what's going on with crude oil, because crude oil has come under a lot of pressure. We obviously had that strong rally last week where we ran into resistance at that falling trend line at the 50 SMA, and that was after Trump announced those sanctions on Rosneft and Lukoil. We're actually seeing a fall lower. This is because the market's starting to get a little bit concerned again about a potential supply glut. We've got an OPEC meeting on Sunday where OPEC Plus is expected to announce further output increases, albeit modest. And if they do that, again, that's sort of leaning towards that oversupply concerns. This comes at a time when the market's also just reining in those expectations surrounding the US sanctions on Rosneft and Lukoil and how much they will actually impact Russian exports. And then that's sort of, those negatives are really offsetting any optimism that may surround a Trump-China trade deal potentially on Thursday. So we're just testing that 60 level, very important psychological level, after failing to rise above the 50 SMA and that falling trend line. Next level to watch on the downside, 58.50, that's the falling channel and potentially lower band in this sort of falling wedge pattern. Break below that brings 56 into focus. That was the low last week at around the 55.30, which is the low that we saw for 2025. Buyers need to get above this level here, 62. That's the 50 SMA and that falling trend line in order to bring 65 back into focus. So I hope that you've liked everything that you have seen. And for more videos like this, then please do like and subscribe. And I will be seeing you next time.